Loans for self-employed, no credit check. Boost your business. Call 888-653-0124 today or click the link in the description to learn more about our 1-minute application and share your success story. As a self-employed individual seeking loans without credit checks, you'll face significant challenges. Traditional lenders often require strong credit histories, making it difficult to secure financing. Nevertheless, alternative options exist, such as online lenders, peer-to-peer platforms, and microloans, which may offer more flexible criteria. Focus on building your business credit and improving your financial profile rather than pursuing risky no-credit check loans. Maintain detailed financial records, manage cash flow effectively, and consider secured loans if you have assets for leverage. By understanding the documentation requirements and demonstrating income stability, you'll increase your chances for approval. Exploring these strategies can open up more viable financing opportunities to secure. Challenges self-employed individuals face when seeking loans. Uncertainty often plagues self-employed individuals when they seek loans. Challenges include meeting stringent eligibility criteria for self-employed loans and providing a steady income. Lenders may use alternative credit assessment methods for evaluating creditworthiness. While financial assistance options exist, be cautious regarding potential predatory lending practices. Focus on improving your financial profile and exploring legitimate lending options rather than seeking no credit check loans, which can be risky. Alternative lending options for self-employed with limited credit history. When exploring alternative lending options, you'll find that online lenders often have more flexible criteria for self-employed borrowers with limited credit history. Peer-to-peer lending platforms can connect you directly with individual investors who may be willing to fund your loan based on factors beyond traditional credit scores. For smaller financing needs, you might consider microloans or community development financial institutions, which typically focus on supporting local entrepreneurs and small businesses. Online lenders and their criteria. Maneuvering the lending terrain as a self-employed individual with a limited credit history can be challenging, but online lenders have emerged as a viable substitute. These platforms often use alternative credit data to assess risk, offering more flexible eligibility criteria for self-employed individuals. While they don't provide no credit check loans, online loans for self-employed borrowers may require less traditional documentation, focusing instead on business performance and cash flow. Peer-to-peer lending platforms. Emerging as a popular alternative for self-employed individuals with limited credit history, peer-to-peer (P2P) lending platforms connect borrowers directly with individual lenders. These platforms offer self-employed financing choices with potentially competitive rates. While not guaranteed, P2P lending can provide access to funds for those who may struggle with traditional lenders. To increase your chances, focus on improving your financial profile and presenting a solid business plan for potential lenders. Microloans and community development financial institutions. For self-employed individuals with limited credit history, microloans and community development financial institutions, CDFIs, offer viable alternatives to traditional lending. These responsible lending practices cater to the financial needs of self-employed borrowers. Microloans provide small-scale funding for startups and growth. CDF is focused on community economic development and financial inclusion. Both options typically offer more flexible terms than traditional banks. These alternatives emphasize local economic impact and personalized financial support for self-employed entrepreneurs. Building business credit as a self-employed individual. Building business credit is essential for future financing opportunities. You'll need to start by separating your personal and business finances, then establish dedicated business credit accounts. Consistently making timely payments and managing your credit utilization will help you develop a strong business credit profile over time. Separating personal and business finances. A self-employed individual's financial success often hinges upon their ability to separate personal and business finances. This practice enhances financial clarity, simplifies tax preparation, and improves access to credit-check business loans. When seeking self-employed loans, demonstrating clear proof from earnings becomes easier with distinct accounts. Financial resources for separating finances include dedicated business checking account, separate business credit card, professional accounting software. These tools help maintain a clear financial boundary, essential for both daily operations and future loan applications. Establishing business credit accounts. Building business credit as a self-employed individual starts with establishing dedicated business credit accounts. Open a business checking account and apply for a business credit card. Avoid seeking loans for self-employed no credit check, as these often involve predatory lending practices. Instead, focus on building relationships with credible partner lenders. Consider alternatives like invoice factoring or a freelance cash advance from reputable platforms to manage cash flow while establishing your business credit profile. Timely payments and credit utilization. Timely payments and proper credit utilization form the bedrock for building a strong business credit profile for self-employed individuals. Consistently meeting your monthly payments and maintaining a healthy credit utilization ratio are essential. Documentation requirements for self-employed loan applicants. When applying for loans as a self-employed individual, you'll need to provide thorough documentation to prove your income and financial stability. You should be prepared to submit tax returns and profit and loss statements, which demonstrate your business's financial health over time. Furthermore, lenders may require bank statements, financial records, and copies of your business licenses and registrations to verify your operational status and legitimacy. Tax returns and profit and loss statements. As a self-employed individual seeking a loan, you'll need to provide thorough documentation to prove your income and financial stability. Tax returns and profit and loss statements are essential for demonstrating your business revenue and financial health. While self-employed loans, no credit check, may seem appealing, responsible lenders will always review your financial history. Frustration with complex application processes. Relief when organizing financial documents. Anticipation of a smoother loan approval. These documents streamline the application process and timeline, increasing your chances for loan approval. Bank statements and financial records. Bank statements and financial records serve as crucial evidence regarding your financial stability when applying for loans as a self-employed individual. Business lenders typically require at least 6 months' worth of bank statements to assess your cash flow and income consistency. As a self-employed borrower, you'll need to provide detailed financial records, including profit and loss statements, to demonstrate your ability to repay short-term loans or alternative financing options. Business licenses and registrations. Beyond financial records, lenders also require proof regarding your business's legal status and operations. When applying for business loans, loans for entrepreneurs, or loans for freelancers, you'll need to provide valid business license, tax registration documents, industry-specific certifications. These documents demonstrate your legitimacy and compliance with regulations. While merchant cash advances and short-term loans can address urgent financial needs, they often have higher interest rates. Focus on improving your creditworthiness and exploring traditional lending options for better terms. Strategies for improving creditworthiness. Improving your creditworthiness as a self-employed individual requires a multifaceted approach. You'll need to focus on maintaining a strong personal credit score through timely bill payments and responsible credit use. Furthermore, consistently reporting your income and building relationships with financial institutions can help establish your reliability and increase your chances for loan approval. Maintaining a strong personal credit score. Maintaining a strong personal credit score is crucial for self-employed individuals seeking financing alternatives. A good credit score can lead to quicker funding speed, lower interest rates, more favorable repayment terms for self-employed loans. A strong credit score is a key benefit. This demonstrates your financial responsibility and increases your chances for approval. Regularly monitor your credit report, pay bills punctually, and keep credit utilization low to maintain a healthy score. Call 888-653-0124 today or click the link in the description to learn more about our 1-minute application and share your success story.